Okay, let's start next chapter, meeting of the board and its powers. So coming to the section board meetings 173. First meeting within the 30 days of the incorporation. Now company was incorporated today. Within 30 days, like for example company is incorporated on 1st January, then the first meeting should be held, that is board meeting. Board meeting should be held within January 30. By January 30 board meeting should be held. Next, 4 meetings in every calendar year plus maximum gap of 120 days between 2 meetings. So 4 meetings need to be held in the, but maximum gap should be there for 120 days. Section 8 company in 1 meeting in every 6 months and 60 days, and then 1 meeting in each of the calendar year. Okay, the thing is 120 days between 2 meetings, like 4 meetings in every calendar year. First meeting within 30 days of the incorporation. 4 meetings in whole year, like 120 days maximum gap. And again, clearly I will say, wait, company incorporated within 30 days first board meeting, and in whole year at least 4 meetings need to be held. For every meeting there should be a 120 days maximum gap. When comes to the 1% company, small company, in these companies 2 meetings is enough for total year, but these 2 meetings should be have minimum gap of 90 days. The video conferencing, through video conferencing also you can attend the meeting. This is the point. Next, not less than 7 days. 1 minute. Okay, not less than 7 days. Not less than 7 days. Not less than 7 days notice is should be. So when the meeting is held, at least 7 days before meeting, you have to give the notice to at least one independent director. If independent director is not present, then decision need to be circulated to all the directors, and later it should be ratified by the independent director, which means it need to be ratified by the, means accepted by the independent director. Simply this whole section is 120 days. Maximum gap should be there. 4 meetings need to be held, and within first incorporation 30 days. Okay, next quorum. Quorum section is next. Quorum is you have to 1/3 of the total strength and 2 directors, whichever is here. Now you have conducted in a company, you have conducted a meeting, like number of persons need to be present in the meeting, like minimum number of the members need to be present at the meeting. So that minimum number we will call as quorum. That quorum which means 1/3 of the total strength. For example, there is 18 members of the directors in a company into 1/3. How much? 6. So 6 or 2. 6 or 2, whichever is higher. 6. So 6 members at least need to be present in the meeting. At the time only the meeting is valid. If you will pass a resolution in the meeting, or you will discuss the matters in the meeting, at the time only that will be valid. So quorum need to be present. Continuing director may continue to act, increasing the director. Okay, next, for example, for all the companies 1/3 of the directors or 2 directors, whichever is higher. And for the section 8 companies, 8 members or 25% of the total strength, whichever is lower. But greater than or equal to 2 members need to be present. Okay, this is whichever is higher, this is whichever is lower, and this is 2 members need to be present for the section 8 company at least. Okay. Now for example, there is a discussion regarding, in meeting there is a discussion regarding the contract. In that contract, there in the total number of the director, 2/3 of the members are interested in that contract. Then at least 2 non-interested directors should be present at that meeting. Okay. Next this is in circulation, which resolution to be moved at meeting if 1/3 of the director require the same. That's all. Nothing is to remember. Then coming to the audit committee, which is very important. See, audit committee. Companies required to appoint an audit committee when 10, 50, 100. What is this? Paid up share capital, borrowings, turnover. If in any of the 3 condition it is okay, then audit committee is compulsory for that company. This is public limited company only. These limits are useful only public limited company. Okay. Next, see how many number of members should be there in the audit committee means 3 members, and majority should be independent director. Okay. Next, and this is the functions. You can read by yourselves. Powers of the you can read. And what is omnibus approval? In this omnibus approval, related party transactions will be there for a company. So audit committee cannot give for every related party transaction an approval. So combinedly for all the transaction, it will give an approval. That combined transaction approval is called omnibus approval. Omnibus approval, when combined transaction is maximum is less than or equal to 1 crore per transaction, then only omnibus approval is given. Less than or equal to 1 crore per the transaction, then only omnibus approval is given. And this omnibus approval is valid for 1 financial year, maximum 1 financial year. This is 1 crore and 1 financial year is important point to be remembered. Next, whistle mechanism. Whistle mechanism means mechanism of the director employed to report. See, for example, any fraud is happened, or any employee or any head person is doing something manipulation, or they are using their power and doing like they are undue influence, like this and all happening, then the employees or the other person can report to the higher authorities. This is called whistle mechanism concept. This one is applicable only to the listed company accepting public deposits from the the companies which are accepting public deposits from the company and borrowings 50 crores. Borrowings 50 crores. Borrowings 50 crores. So listed company, public deposit company, and borrowings 50 crores, which is greater than those companies are eligible for the whistle mechanism. Next, coming to the NRC, you have to remember in this chapter limits, especially MCQs will be asked. See, in this page what we have to remember is 30 days. See, I'll tick it. See, 30 days, 120 days, 4 board meetings, and this all the companies only 2 board meetings is enough. Next, 7 days prior notice, at least 1 independent director should be there. Okay, if not there, then it should be accepted later by the independent director. Quorum 1/3, 2/3, whichever is higher, 88 to 25%, whichever is lower, but at least 2 members need to be presented at the section 8. Okay, that is also we can know. So 1/3 or 2, whichever is lower, 25%, 25% and 8, whichever is less. Okay. Next, audit committee, as I told, 3 members. This one also we can remember. Financial year 1 crore, 1 financial year. Whistle mechanism, listed company accepted public. This is only you have to remember. The listed company accepted public deposits 50 crores. Next, NRC, SRC. If the company having greater than security holders, then SRC committee will be there. Okay. SRC committee means for SRC committee, 1000 security holders need to be present. For NRC nominee remuneration committee is same as audit committee, like 3 non-executive directors, 50% should be the independent directors. This is the composition of the NRC committee. SRC greater than or equal to 1000 security holders. Powers of the board, no need. Next, special resolution is required for the the board of directors have powers, but to utilize all these powers, the company need to pass the special resolution. What are those points? Means if there is an investment of if they sell or dispose or given lease, substantial undertaking, okay, or invest in the trust securities or benefits to the director, or existing proposed director borrowed and loan amount which is greater than paid up share capital free reserve securities premium, means special resolution need to be passed. Now here sale dispose of the undertaking. I told what is undertaking means if the investment in an undertaking is greater than 20% of the net worth, or the total income from that asset is greater than 20% of the total income, then we will call undertaking. 20% of the net net worth. See, in this page we have to remember NRC committee as usual as audit committee, SRC committee 1000 state security holders, Vijay mechanism, accepting public deposits, listed companies, borrowed capital 50 crores. Next, power of the board of the directors. Special resolution need to be passed for sale or dispose undertaking. Undertaking means 20% of the net worth, 20% of the total income, investment, paid up share capital, free reserve securities premium, benefit of the director. Next, investment in the securities. Okay. Next, charitable donations. It is also very important. Donation is less than or equal to 5% of the average net profit of the 3 years. This is also a numerical one you have to remember. Please remember it. You can get in MCQs. So, 5% average net profit of the past 3 years. Board resolution is enough. If greater than 5% of the average net profit of past 3 years, ordinary resolution need to be passed. Board resolution, if the profit is less than 5% or if it is more than 5%, then ordinary resolution need to be passed. Okay, remember that. Next, political contribution, you can give how much you want. Next, disclosure interest by the directors. See, you have any interest in the company, that if you are being a director, if you have any interest in the director or in any body corporate or in any association, you have to mention in first board meeting itself. And first board meeting of every financial year you have to discuss. If there is any changes in the interest you hold, that changes disclosures also you have to mention. Okay. LGS, which means loans guarantee securities. Loans guarantee securities can be given to the director and firma. No, not allowed. So it is allowed only when the special resolution is passed and used for the principal business. The private company, 25% of the voting power, body corporate. That's all. Next, this is very important. What is this means? See, now there is a holding company. He can invest in subsidiary company 1 and subsidiary company 2. He cannot invest in another third layer of the subsidiary company. It is not allowed. Only 2 layers is allowed, and third layer is allowed only in two situations. One is it is accepted. It is like it is outside the country. As per their country law, they can have another subsidiary, or provision of the law they can have another subsidiary investment, but only 2 layers only is possible to invest in other companies. Okay. Next, condition to make the LGSI. Okay, condition make to the, which is loan guarantee security investment. You can make only if the conditions are satisfied. What are those conditions? We'll discuss in one by one detail. Okay. So first point is unanimous resolution, and the exceeds limits. If the limit is exceed these 2, then special resolution need to be passed. What is that limit? 60% of the paid up share capital free reserve securities premium and 100% of the free reserve securities premium, whichever is more. Remember this, don't confuse this point. Whichever is more, 100% of the free reserve securities premium, 60% of the paid up share capital and securities premium. Okay, 60, 100, whichever is more. And return of income, no default in the deposit, register should be maintained, PFI approval, this and all no need. But remember this point very very sure. 60%, 100%, and whichever is more. Exemptions of the banking, insurance, their business only giving loans, taking loans, so for them it is exempted. This and all. Okay. Next, coming to the related party transactions. We will call the related party transactions only these conditions are covered. Okay. What are those conditions? First condition, sale or purchase of the goods. Sale or purchase of the goods. It is the more than 10% of the turnover. Sale or purchase of the property of any kind, net worth. See, here it is goods, that's why here it is turnover. Here it is property, so that's why net worth. That is the difference. That's all. Enough for everything. That is 10% only. So 10% of the turnover, 10% of the net worth. Leasing only, no. So that is also 10% of the turnover, and any goods or services, whichever it is a 10% of the turnover only. Only if it is a office or place of the profit sharing, then only 2,50,000 per month. Next, underwriting securities means will give commission for the underwriting securities. No. So for that 1% of the net worth. For all other things are 10% of the turnover, 10% of the net worth, and 2,50,000 per month. Okay, this is the things you have to remember. And register, you know, register of the contracts in which exceptions only if the goods and services is less than or equal to 5 lakhs and it is a banking company, then this exception, and for these two things there is an exception. Now all other things, all other contracts need to be registered, which is that 5 lakhs banking company. Okay, next I think this is an, so we'll meet in the next chapter. Thank you, bye.